Hello. Large cap stocks swing trading daily chart analysis using long option line swing trading strategy. We have our stock watch list, and when you swing trade, it's good at the end of the day when the market close to do your analysis, or you can do it early in the morning, if you have time in the morning before going to work, especially if you have a full-time job outside of your trading. So we are going to analyze those three stocks, and the first one is ICE. As a swing trader, you can swing trade using daily chart analysis, and you can use either 1 year daily chart or maximum daily chart. And in this instance, we are going to use maximum daily chart because we are using long uptrend line swing trading strategy, and the long uptrend line or support line, some of them are very low, especially if the price is too high. You may not see the lowest line on the screen, especially if there is no support for within, because 1 year daily chart is year to date. No, it is 52 weeks time frame or year to date from last year to that same time this year time frame. And if there is no support on that line, that is another trend line that you have, you may not see it on the screen. Therefore, you can see that we are seeing one, but we are not seeing the other. That's why with long option line swing trading strategy, is good to use maximum daily chart. The chart didn't rest on that line within the past 2 years. Therefore, it may not show up on the screen if the price is higher up compared to that line. Having maximum daily chart will allow us to have a bigger picture of the pattern drawn by the price for more than a year, while year to day daily chart will have only 1 year time frame. You'll have bigger bar to see without zooming on 1 year daily chart. You'll have 52 weeks low and 52 weeks high to see as well, but you will not see, you may not have a big picture of what is going on. So those are a good reference as well. So you can use both interchangeably, but we are going to start with maximum daily chart. So ICE, we have the purple line, which is a long uptrend line. A long uptrend line, in my opinion, is more than 1 year. Yeah, the support line is more than 1 year, whatever it originated from, which is the case. And so far we only have one for this stock, and we like to buy at that trend line. That's pretty much what the strategy is. You wait for the price to pull back to the trend line that you selected to buy at. You trace that line, connecting higher lows. That means you are using upward stocks, and in this instance we are using large cap upward stocks. And as a beginner trader, swing trader, that's what I would recommend as well, because they are not volatile and they are kind of stable. That way you can spend your energy practicing the strategy you are using rather than dealing with the volatility of the stock. So if you do not get in at a certain point, you will have some flexibility to get in. It does not shift quickly direction. So, and having upward stocks, your support line, the way we are tracing it, will be upward as well, upward trending, and tracing those long trend line, connecting higher lows. You can choose the ones that you feel confident that will be the lowest price that you'll buy if the stock is likely to come down to those lines at some point, and if they do, that's where you like to enter when they start going up. So when they start going up, you buy some share and you go along with it, with the price, creating a new mountain, and you'll accumulate a lot of profits along the way until you reach a new high, because those large cap they do reach a new high often. You have one here, you have probably one here, and then all the way as well. So they do reach it periodically, and you can aim for one depending on where you enter the trade. If you enter the trade somewhere higher up, maybe if you don't know if it's going to reach a new high, you might get out after you have 5% return. But you get in well, you can aim for the next high. So when you reach the next high, you see the next high, then you sell the stock. So that will be your exit point. 5 to 10% return, or the next high will be your exit point. So you determine your entry point and your exit point, and you just wait for the price to do whatever it's doing. You just analyze it on a daily basis after the market close to see every single puzzle bar that the price is adding to the existing one, to see if you can understand where it's going. And once it reach your trend line and start going up from there, few higher lows there, you get in. There is a chance it could turn around and go back down and wander around the trend line before going up. There is a chance it will just go up from there. There is a chance it will continue back down. If you have another trend line below it, continue going there. You just want to decrease the probability of buying it too early. That's why when you reach the trend line, you do not buy. You want to wait to see, because to reach the trend line, it will be creating lower lows. So you want to see at what point it will start creating higher lows and like higher lows. This low is higher than this one, and this one is higher than this one. Is the red bar, the bottom of them. Sometimes some green bar will be lower as well, and you can use it. But once you start having higher lows, you can trace a small uptrend line. You can get in after 2 or 3 higher lows. You can get in at the first or second green bar that follow a previous pullback, and just see if the price will continue going up, or if you turn direction. Some of them will start going up, making higher lows, will pull back, making lower, like change direction, making lower lows, and then start going up again, making higher lows, and take off from there. So just like this area, so touch it, go up, but come back again before taking off. When sometimes it will just touch it and just go up from there, come back to it and touch it and go up from there. So you just, by trading the same stock over and over and over, the goal is to be able to get familiar with their pattern. That's why it's good to have a watch list of a particular, for a certain stock that you handpick and have on your watch list, and just trade from your list throughout the year, and take note of the one that you didn't have a good experience with. They didn't align well with the strategy you are using. Their behavior does not really align with the strategy you are using. And then at the end of the year, you can go to your larger list and see the one that you didn't trade, add them to your watch list, and take the one that you didn't have a good experience with out of your watch list, and do it again the following year until you, at the end, you end up having a list of stocks that really align with the strategy you are using, and you understand their pattern, and that is just your watch list. You don't spend energy looking around, seeing what is the high stock out there for you to swing trade any given day. You have your own library of stocks to trade from, and you just analyze the chart. You give yourself a homework to analyze the chart on a daily basis. You have a job. If you have a job, you go to work every day. If you have your own business, you work at your own business every day. So treat your swing trading as a business or a job, and give it a time. Allocate a time, 2 hours a day, to spend about 1 hour to trade the stocks, 30 minutes to check your account and pull transaction history to see if there are some transactions that you need to record a dividend payment, or if you purchase stock or sold stocks, you check, you can record those on your swing trading spreadsheet. And 30 minutes during the day while the market is open, you place your orders. And we like to do it around our lunchtime, since I have a full-time job as well. And doing your analysis after the market close or early in the morning before the market open allow you to check the stock on your watch list to see if one is well positioned for you to buy. And around lunchtime, when you check your account, you will see if there are stocks there that have a good profit. You put them on your chart to see if they reach a new high, or if you have a good profit that you like to sell it, you sell them. You place the order to sell it, and then you check your watch list to see if you highlight some to purchase that day. You check them on the chart again. They are the only one you are going to check during your lunchtime. The one you highlighted to purchase, you check them again to see how they perform during the day, and to see if you still want to buy them, and you place the order to buy the one you want to buy, and you get out of your account and you are done. So that is pretty much what your swing trading routine is going to be. And this morning, February 19, 2025, we are going to analyze the chart to see how the stocks on our watch list perform the day before. And I did my analysis the day before, like yesterday night, and during this video we are just going to check 3 of them in detail. So, and the first one is ICE. So ICE, we like to buy at this trend line, but right now it's higher up. And yesterday, even though the price dropped yesterday, it has a new high here. It reached a new high. So it seems to be following a trend line going up. It's not ready to go down yet. And as we are looking at it, it does make a wide mountain, and it made this one that cross a year and a half pull back, and then it sharply pull back here and then start going up. So it has been going up. In fact, it touched base with this trend line a few times on its way up, but like it has been going up for the past 2 years and a half. So and you see it's gradually got there and sharply got down. So I don't know if it's going to repeat the same pattern this time. We don't know, but right now it's not done going up yet, and we just prefer, we don't know at which stage it is creating this upside of the mountain, if it's ready to create the descent side of the mountain, because like a mountain, you have the upside and the downside. So we don't know yet. For that reason, I prefer not to use a short upturn and swing trading strategy to trade this, but I prefer to just use my long upturn and swing trading strategy, wait for it to come down to this line, and when it start going up from there, get in. When that will be, we don't know. We are just going to keep observing it. So now let's go to 1 year daily chart to take a look at it. So it was the day before that it was Friday the 14th that it reached a new high. On the x-axis you have the date, and on the y-axis you have the price from 0 up. So it reached a new high and pull back there. So you can easily trace a short trend line here, and if I move it further, it will touch these lows here. A red bar just means the price dropped that day. The price in the evening at market closing was lower than the price in the morning at market opening, so the price dropped. And a green bar means the price in the evening when the market closed was higher than the price in the morning when the market opened. The price went up. So yeah, is having a short uptrend line here, and you can see your 52 weeks low and high as well. In the past, for years, I used 52 weeks low and 52 weeks high strategy to trade and invest, buying close to 52 weeks low and selling at 52 weeks high. And a strategy that I will continue to practice because it has room for improvement. When I was using it, I didn't really pay attention to the trend line the way I'm paying attention. I didn't really pay attention to the chart the way I'm paying attention to the chart for swing trading. So I think the skills that I'm learning through swing trading is going to help me improve the 52 weeks low and the 52 weeks high trading strategy that I practice over the years. And at the same time, if I want to invest in stocks long term or semi long term, using strategy from swing trading that is going to help me with that. At the same time, strategy skills that I learned from trading 52 weeks low and 52 weeks high strategy is helping me a little bit in my swing trading strategy as well, to pick the strategy that makes sense to me. That's how I end up choosing the trend line swing trading strategy. And last year we did short up to long swing trading strategy, and this year we are doing long up to long swing trading strategy, which in some way it is like 52 weeks low and 52 weeks high strategy modify. But yeah, so take your time, keep practicing the strategy you are using, and start trading with small dollar amounts. Use large cap stocks so that you can focus more on the strategy you are practicing rather than trying to control and keep up with the volatility of the stocks. That way you can have time to practice the strategy you are using, get familiarized with the strategy, and fine tune it based on the stocks you are trading. Fine tune it to to customize it to meet your personality, tap your risk tolerance and the financial goal that you have in mind. And once you narrow down the strategy that works for you, you customize it to your level, you can start putting a little more risk on your place by including other cap stocks like mid cap or small cap stocks to see if you can find some stocks there that well aligned with that strategy that you develop to swing trade with, to help you reach your financial independence. So the next one that we are going to analyze here is going to be okay, so let's go back down. We are in the I session, IRM. And IRM is highlighted because we purchased it already. So the one we purchased, we like to highlight it on our stock watch list. That way we know that we already have that in the portfolio. So on our maximum daily chart, we have two lines that we colored, one longer than the other, and we purchase it when it touch base with one of them and start going up. That's where we have the arrow facing up, facing the bar shows where we bought it. But right now it turned around and start going down. So yesterday the price went down. That's why we have the price highlighted, the closing price highlighted in red. And as you can see, it's not something that does this sharp mountain, but it did it here anyway. So it seems to be move close to the trend line, but around this area it veered up. So we have those two lines, but when we bought it at that one, thinking is done, the descent, it may not be because it's below it right now, and we don't know if it's trying to come down to this area. So we'll just keep an eye on it. In the meantime, it will be in our accounts negative. We are not going to lock in that loss by selling it. Therefore, it might take a while before it becomes positive for us to sell it. So on the 1 year daily chart, you are seeing your 52 weeks low and high as well. And yesterday, I think there was some earning there. I don't know if it was yesterday or what, the 12, 14, I'm not sure, but anyway, so you can see that it pulled back to the trend line and start going up. We have a low there that is higher than this one. We have another one there. Let's zoom a little bit more. We have another one there that is lower, that is higher than this one, and this one is higher than this one. So we chose a small trend line there, and then we have a green bar. The price went up, but then at the day we bought it, I think it was a green bar, but then by the end of the day it turned red that day, and it will go up a little bit and pull back, rest on it, on that trend line a little bit, and went up a little bit, but now went back down. So it's been wandering around the trend line, whether it's going to continue going down or is going to turn around here and go up, we don't know. But with as a large cap, the behavior is displaying here is what makes it giving you some flexibility to get in without feel like you are left behind, because it can, when it fall back to a low trend line, it tend to wander around that trend line quite a bit before gathering the strength to before getting ready to go back up again. So it might wander around the valley quite a bit before climbing a new mountain. So if you do not get in early, you can still get in. If you're not getting it on time that you want to get in, it was after the fact that you notice it, you can still find a way to get in. You'll just buy it at a green bar that follow a pullback. So if we didn't buy it there, we have instances here that we could have purchased it here as well, but again, it's not going up yet. Therefore, even but if we bought it here thinking, well, it fall back, we missed buying it somewhere here and it pull back and then start going up, and we buy it here, we won't have missed much. If anything, we'll have purchased it at a lower price than here, but still it's still going to go down. It's still going to be buying it a little early here as well. Therefore, it's just about minimizing, trying to determine if it's done going down. That's why we want to wait for few higher lows before we get in. But few higher lows in the same direction may not be enough for some stocks. They actually will want to change direction, like in this instance when it went up, having higher lows, but then turn around to go down and then turn up again. But even that was not enough. It pulled back again. So it's just that, you just, every single stock will have their own way of behaving, and it might be a good idea to actually pay attention to what the stock tend to do at that trend line before you get in. And I didn't really pay attention to that, but you can see that we have a same behavior in some way here. Although this area, it didn't go below the trend line though, but it really wandered around there before taking off. And here it wandered around there as well before taking off. So I don't know if that's just a pattern of this stock to when it comes down to a low trend line to leave there a little bit for a while before taking off. So that is a good thing to notice. So we bought it, and at this point, since it's going down, we'll just keep comparing where it is to where we bought it. At this point, we are not even going to be talking about our exit point yet. It needs to go past where we bought it before we start thinking about our exit point, which will be, the new high probably. But anyway, so that is that. We'll just keep seeing what is doing day after day. So the last one we'll analyze today is IT. So IT on a maximum daily chart, we have this one that we like to buy at, and right now, yesterday the price went down. It reached a new high there and start going down. So, but it's far from the trend line we like to buy. And technically, when I'm doing my daily analysis, that's all I'm looking at, where the price is when the market closed for that day compared to where I wanted to buy. And if I already bought it, I will look at where the price is compared to where I bought it, and see, glance at where we want to exit to see how far we are from it and things like that. So, but when I'm recording a video, I like us to discuss the stock in depth a little bit. So this one, I went to 1 year daily chart so that we can see the bar. The previous time we bought it was in 2024 when we were using short up to long swing trading strategy, and you can see we traded. The arrow at the bottom shows where we bought it, and the arrow on the top shows where we sold it. So we bought it, we sold it, we bought it, we sold it, we bought it, we sold it, we bought it again, and then it pulled back on us, and we stay in that trade for the longest time that it was negative, and then it started going up, and the day it reached a new high, we sold it. We have an arrow there that the new high is covering, so to lock in some profit. But that day the price dropped. That day, since we trade around lunchtime, we could have it could have reached a new high and start dropping that day by the time we caught it. But we were able to sell it at a profit, but it because that bar is higher up than the bar we bought it at. But then after that it started dropping. So it seems like when it reaches a high, it tends to drop. So I don't know at where it's going from there, but the next time we will get in, we will want to get in at a lower uptrend line so that we don't get stranded higher up waiting for it to come back. But yeah, it took us, last time we bought it, we stayed in the red negative for a while, for some months. We bought it in November and sold it in February, and now we are waiting to buy it again hopefully at the trend line. So whether it's going to get there, we don't know, and when it's going to get there, we don't know yet. It's still higher up compared to that trend line. So this conclude how you can analyze your stocks if you swing trade using long option long swing trading strategy. It's all about where the price is in relation to the trend line you like to buy at, and if you bought it already, where the price is in relation to where you like to sell it. Thank you. We thank you very much for watching our videos. We thank you very much for your time, and we thank you very much for all of your comments. We thank you very much, you all that subscribe to our channel. I'm Afiavi Liberman, cross of Liberman Consulting L.L.C YouTube channel, and in soap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small, one share at a time, $100 to $300 per trade, to get yourself familiarized with the stocks you are trading and the strategy you are using to trade them. For more of swing trading videos, will you please check the playlist in the description. Thank you. And if you want to create your stocks watch list, we have videos related to how you can go about it, and we have playlists for those videos. We do publish those videos on Fridays currently, and we have some published already, and you can see them in the watch list or watch them. You can see those different videos in the watch list related to it. Thank you.